Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today, we're going to talk about the cannabis market as it pertains to pricing, taxes, availability. So California is going to increase their taxes. They've also pulled off Kush Punch, seizing $21 million of product. A lot of licenses are suspended, going unused, coupled with a cannabis price decrease could lead to some catastrophe. So on the line with us is Dan, chemist with Good CBD Products.
We love catastrophes. They're opportunities if you turn them right.
There could be a massive catastrophe. I mean, California, fifth largest GDP in the world, and one of the largest producers of agriculture, and so huge opportunities if they increase their tax beyond 47%. It's pretty crazy to even think about that. So the markup for cannabis excise tax will increase from 60% to 80% on New Year's Day. The markup is used to provide a basis for California's 15% excise tax.
I'm just back, right? I was rolling through Cali, talking to stores, visiting farms. One of the issues, common refrain, black market, black market, black market. And then this whole thing of the taxes actually going up for these retail providers. An amazing, out of touch, seemingly kind of way it works, right? But again, how's that any different from what we've seen in Washington and Oregon, Chronic?
The purpose of the markup is to have an actual tax match, the 15% gross receipts rate approved by voters. After annualizing thousands of transactions in the state's track and trace system, analysts have determined that the required markup rate for the period beginning in January 1st is 80%. And so that's going to be, this increasing the price of flour, obviously, and everything else down the road. So not really sure how that's going to expel the legacy market or black market. People are just going to go to the Emerald Triangle. It's grown outdoors. It's inexpensive. It's their trusted provider. This really isn't going to help California out in the long run.
Well, the last 2 weeks for me, literally, 2 weeks ago in California for a week, where the average pre-rolled joint price was between $10 and $12. You couldn't really find anything below that. And time after time, I would talk to retailer, and the first or second business problem identified with California was black market and price pressure based on a deep cannabis culture. Everybody's used to a lot more for a lot less down there. Then came up to Washington, spent the last week in Washington doing our secret shopper thing, running around, doing the same thing, right? Going to stores, buying weed, buying joints, etc. $3 joints, $5 joints, all of this. Really, from a compare and contrast standpoint, really almost kind of a shock. I'm like in system shock, weed system shock, Chronic.
I like how this individual, Adam Spiker, executive director of the Southern California Coalition, said, quote, "At the very least, this is tone deaf, given what the legal industry is going through right now and the lack of control of the illicit market." Pretty much wraps it up right there. Very tone deaf. Not really sure California's understanding the overall market, legacy market, competitors, impacts. They did, however, revoke the license for Cushy Punch, seizing $21 million worth of product linked to illegal black market sales, as well as potentially involved with the vape crisis. And so taking off another, huge competitor, just one more issue with supply and demand.
It's funny in business, you don't know what every one of your crew is doing, and you need to, because somebody selling a little bit out the back door will rupture the whole thing. And what can you say? There's a lot of different businesses down there. The math would simply say they can't all be square operators. They can't all be.
So Cushy Punch had some merchandise seized, including 7,200 illicit vape cartridges. So they were obviously manufacturing intended for the black market. Kind of reminds me of Ascent Industries, Agrima Botanical up in BC, helping them with their pre-roll machines, automating that with some automation and having them involved with illicit sales up in Vancouver, BC. Health Canada came in 6 months later. They were still doing it. I obviously had no idea what was going on, and they lost their license, the first Canadian LP to lose their license through stupid stuff like this.
Well, this is this is the thing. That is an actual conspiracy, right? More than one person is taking a sack and selling it out the back door. When that's happening, you might be able to talk enforcement into, yeah, we vaporized the guy and it's all fine. Whole nother deal when you got to explain that 7 or 9 people, right, were busy crafting dark enterprise stuff. That'll get you zapped, and it should get you zapped.
Cushy Punch had claimed that they were going to destroy those products. But I think that they're probably intended for the market, taking advantage of a lot of the companies and rec shops that didn't go from medical to the regulated market. We saw plenty of those in Washington. We still know plenty of people struggling to make that transition. And California has hundreds of licenses unused. There's more than 400 in limbo for not participating in a mandatory track and trace system. So we've had 2 years where our data has been broken. So whether it was Leaf, MJ Freeway, BioTrack THC, whatever it is, all of them suck. All of them are broken. And no state should be signing with them.
Just a sec. In your opinion, that's from the legal department.
Oh, of course, that's my opinion. I think that they all know that they're broken. All of those companies are terrible. Ultimately, what we need is data. We don't have that data, but these companies said we're not even going to go through that. So 400 of them were like, forget about it. And so, as you know, there's over 5,000 rec shops in Oregon, and California is going to have 1/10 of that amount. You drive through the I-5 corridor all the time. Oregon has a plethora in particular cities. There's some deserts out there that don't have any. California, though, weren't you saying that it was fewer and far between rec shops than Washington and Oregon?
Yes. And here's the thing. Once it goes legal, you got to play all the way legal. You can't play, we'll still supply the gray market, right? I'm going to send some vape cartridges over here to that unlicensed store. When you do that stuff, they get 6 months, a year, 2 years. They come back at you anyway, right? Mm-hmm. You can't do it. And it's such a shock to these businesses to realize the unintended consequences of, we got in, oh my gosh, we got in, and 3/4 of the people we're used to selling to, we don't get to sell to anymore. Again, the number of times that we've dealt with people who the trauma to their supply chain and really to their sales has been, it's inordinate. It's a crazy biz. I dig it.
So of the suspensions in California, that includes 164 distributors, 16 of which were transport only. It affected 2 cultivators, 28 retailers, 8 manufacturers, 41 delivery services, and 34 micro businesses. So they have 7,200 state licensed cannabis companies. So it represents just 4% of the legal supply chain. But if those are in key areas, that whole community is going to be without product.
Right. Part of why I'm going to go to California and stay there, Chronic. I think there's a lot of good story to be told.
I would definitely go down there and check out the weather. Being in Seattle is a little rainy. I think the businesses here are inundated with regulation. They're too worried about, if the colors are attracted to children, if the shapes are attracting kids, if, all this crazy stuff. And so they're unable to have business as usual. They're constantly looking at packaging and all of these requirements. And so any new state that's on board is going to have those issues. I just think that 5 years is plenty, and the companies here have had enough time to figure out regulation, and they haven't. And so it's my opinion that people in Washington and Oregon will not be around in 3 to 5 years. And I mean the majority of them. Over 3/4 of them aren't prepared for this market. They aren't prepared for this industry. They aren't prepared for the regulation. And there'll just be a mass exodus. I'm talking about capitulation, consolidation, bankruptcies. They just won't be around. At least 8.5 out of 10 of them won't be around. They just aren't professional enough to stay in this business long term.
Well, this is why we go pick winners and losers, my friend, right? In the end, there will be only one. There'll probably be like 4, but there will be only one.
You have to have a war chest. We've said that so many times, having multiple millions, at least 7 figures in the bank, just sitting there waiting. Most companies don't have that. BDS Analytics is talking about a price index that's signaling a decline in the prices. September decreased from both the previous months and the same time last year. So year-to-date average has fallen at least 1.3%. So despite overall price declines, the index trended positively for pre-rolls, ingestibles, topicals on a month-over-month basis. However, negative price trends in flower, vape, dabbable concentrates push the index lower. So that said, the average retail price for flower, ingestibles, topicals, vapes that stabilized after dropping 9% through the third quarter as a result of market seasonality. While in the third quarter of 2018, cannabis sales for products declined roughly 4%. So BDS Analytics believes that 2019 declines is related to concerns surrounding vaping sales, which declined 21% through September and affected companies like Philip Morris and Altria.
I wonder, I say speculatively, geez, do you think there's anybody out there calculating that if I keep these tax rates where they are, I keep a black market in place, and if I keep a black market in place, then I need enforcement? You know, it's amazing to me that the tax rates, I think, really are what's driving this whole strange market that doesn't quite work. And if somebody sat down and modeled it, somebody like yourself, a capital analyst there, Chronic, I'll bet there's a tax rate that actually works, that serves everybody, and actually would make it where it actually all worked. I'll bet there is.
Absolutely. You know, follow the money. You're going to find the answer. A lot of these companies are dependent upon that price. I think the majority of the Canadian companies expecting $1.74 wholesale will only survive if that continues. If legalization in the U.S. occurs, those Canadian companies are gone, toast. So definitely about taxes, definitely about wholesale prices. And right now, it's a lot about speculation and not about fundamentals. So I think we're kind of reaching that next wave of consolidation as we look at fundamentals from a value standpoint and not a speculative standpoint. With the AI-based algorithm that we have with technical analysis and predictive analytics, we tested new support levels. It dropped. It was kind of hovering for a couple of weeks, moving sideways, which is perfect for options like a straddle or a spread. But we're down, and I think we're close to the bottom, but it could move sideways and dip a little bit more before finally going back up. Having said that, I think we're a few weeks out from knowing which direction it's going to go. I think we're going to see another incline, but first we got to have some stress, some struggles, some consolidation. That's certainly the next wave before opportunity comes around, but you're going to have to come back to the Talking Hedge and find out.
Oh, wait. So I'm about to hit the ATM, Chronic. How much do I have to grab out before I can jump into your fund?
The artificial intelligence-based algorithm, the exchange-traded fund that we have, is up 20% in the last 90 days. The next closest competitor we have is down 5%. We're doing 25% better than the next competitor. We are positive. They are negative. All of them are negative. So that definitely helps us out a little bit. You can kind of take a look at these rates here. 3-month returns for MJ is -30, -23 for Horizon Life Index, -33 for YOLO, -33 for THCX, -5% for ACT. So, a lot of these companies, a lot of these ETFs are negative, all of them in the last 3 months. Ours is positive. So ultimately what you need is about $250,000 right now, because you have to be an accredited investor. But as soon as we file an IPO, that's going to be at the point when we have received 60 million in funds. We're going to file an IPO and let everybody get into this AI-based algorithm with predictive analytics. Very interesting, very exciting. Every week we kind of take a look, see what's going to happen in the future. So you're going to have to come back and see what happens with our crystal ball predictions, with our index, with the industry, with everything. Talking Hedge is your answer.
I'm going to need a bigger ATM.
So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. By the way, if you enjoy the content, please show your support with the cushy gesture of $4.20 a month on the Talking Hedge's Patreon page. This will kind of help you spread the word. I've been asked to speak all over the world, from Toronto and Colombia, Spain, Miami, all over, Tokyo. But your support's important to me. I haven't monetized the podcast. I want to be as authentic and transparent as possible. I want to avoid conflicts of interest or even the perception of paid opinions. So don't forget to like, share, and subscribe, or pay me on the Talking Hedge's Patreon page, or don't, and I'm out.